What's good, YouTube? Welcome back to another video. It's your boy KidFreak. Yep. So, by the title, you already know. In today's video, I'm going to be sharing with you guys what I like to call an A plus setup, right? I don't want to keep it long. I'm gonna try to keep it as short as possible. So we're gonna get right straight into it. So last week we had a trade that we took, and I called it an A plus setup. Like these type of trades are the trades that I'm taking on my live, on my funded, and just maybe putting an extra risk behind it. But these are the trades that I'm taking, right? To start off with, I'm gonna show you guys my screen. Right here on the right, I have a hourly chart. I like to toggle from the hourly and 4 hour. As you can see, this is the 4 hour chart, and this is the hourly chart. I like to toggle around there. On the left, you can see I'm gonna remove the lipstick on here, but I will explain what it is and how I'm using it. I'm gonna remove this. This is the 1 minute chart, and I like to toggle from the 1 minute to like the 5 minute chart around there. So you're probably wondering what's all this on my screen. Let me delete this. I'm gonna start off by saying this first. This blue range right here is what we like to call the opening range gap. Right? It's 24. It's 200. It's a 248 pip range, and the way that I get this is every day when the market closes, from 4:15 the previous day to the next day at 9:30. That right there is our opening range gap. ORG. If you guys are not familiar, that is in my free guide, free course. In the description, you guys can find that. Check out my WAP, check out my Discord. So within that range, I like to find my entries and make decisions out of there. Right. So I'm gonna show you guys. I'm gonna go back a little. I'm gonna show you guys what that is. So this trade setup that I'm explaining to you guys was Friday. So the opening range, I'm going to explain to you guys how I'm finding this opening range gap right here, right now. So 4:15 is right over here on a 5 minute chart. So as you can see, this is the overnight price fluctuation that's happening. We have the Asian range right here. We have the London that stayed inside the Asian range. Then we have New York session starting around 8 o'clock. So I'm talking this off. So as you can see over here, 9:30 open on this 5 minute chart is right over here, 21,679. I'm marking that every single day. Okay. So there's a few things that I'm watching here, right? On my tools, I'm gonna show you guys my Fibonacci tool. Again, I have these tools in my free guide. I want you guys to check that out. It'll be an easier language for you guys to understand how we engage price. We engage price in an algorithmic way. Okay, we're looking for PD arrays, price delivery arrays. In other words, you can think of it as goggles in the market. You see these arrays, and then from there we make decisions on how price can basically react algorithmically. So on this video, I'm going to be showing you guys how I'm using, I like to call the dealing range. Okay, the dealing range is basically understanding and putting things or ranges in 4 quadrants. We have the 75% level, 50% level, 25% level, and then we have the 1 and 0, basically the whole range. Okay, so let me show you guys the settings. If you guys want, you guys can copy it and just, give you guys a better understanding of how it is. I'm using. Go ahead and copy that if you want. So what I'm doing is I'm marking first. Let me remove this. I'm marking first the opening range gaps dealing range. Okay, this is the whole opening range gap. As you've seen before, this was about a 250 pip move, right? Just about. I love to see the opening range gap be around, I would say 50 to about 100, 120 points. That range is nice. That was sort of the range that you can find nice price movements and make, it makes some good money because you're able to make a decision from a higher range, right? So you can get yourself from a nice premium level or a discount. So there's 5 things before I continue this that made me say, yeah, this is an A plus setup, and I gotta share this. I gotta share this with the group. First of all, we're finding our footing from a premium and discount perspective, right? That's one. We're finding where the liquidity sweep is at. That's two. We're understanding the higher time frame bias. That's three. Um, um, Having an opposing liquidity to attack and or go for that 1-to-2 ratio trade, and also having that nice entry inside of inefficiency to oppose whatever side you're going for. As you can see, we have that here. Okay, so I want to show you guys where I took this trade. I wish I took it on my live or funded account, but I didn't. I took it on my paper trading account. As you can see here, 10 units on a micro contract. Closed position at price 21,762. Average price was 21,695. 21,695. As you can see, that's where we entered at about a 25 pip stop loss, and we attacked the liquidity. But I closed around 21,763. Why? Because I'm already in profit 68 points. That's more than two of what I risk. More than 1-to-2. You get what I'm saying? So 1-to-2 will keep you in the game. 1-on-1 is nice. 1-and-3, you're probably gonna be wealthy. And 1-to-2 is what we like to lock in right there. So to begin with, I'm gonna let you guys see this, right? 9:30 open is right over here. Okay, 9:30 open. The first thing it did was we like to see what the market is doing first. The first 30 minutes is very crucial because we like to see what it's doing. The first thing it did on the 5-minute chart was grab this liquidity, right? And it grabbed the bottom liquidity of 9 a.m. As you can see, this look, we're going to the right now. On the hourly chart, liquidity after grabbing the buy side liquidity, price returned and took sell side liquidity, right? Within that 1 hour, it did that. Okay, so you have to understand that. The minute the market opened off rip, we're in a premium discount from the opening range gap. We were using the opening range as a catalyst. Market open, where are we? Are we in premium or discount? Overnight London did this. This is the lows that it created. This is the lows Asian created. And we had a massive drop. Okay, I am not looking for sales right now. Okay, I'm gonna put that out. I'm not looking for sales right now. Okay, we are in a discount. When you buy a house or you buy anything, or when you sell anything, you want to sell at a premium and you want to buy at a discount. Okay, so once you understand that, that's kind of how we engage price, and we expect price to deliver in an algorithmic way with that mindset. Okay, so 9:30 open is here. We rallied up and we stayed below 50% of that range. Okay, this is another thing. We like to see that 50% level get hit. We didn't get it. Huge gap. We didn't get 50% of it. Failed. Stayed below 25% of it. Drop down. Fill this imbalance. Again, I'm not looking for sales. And then we had a liquidity sweep. Let me share with you guys what these two boxes are. This box over here is a 15-minute fair value gap. That 9:30, 9:15 respected it and notched. Then we came back down inside of it. The body stayed inside of this gap. Another thing, keynote, price usually, you don't usually expect price to get trapped inside these inefficiency levels or these gaps. You expect them to react out of it. So as you can see, 9:15, it react out from a buy standpoint and it returned back down, taking that hourly low, 9 a.m. low. Look at me toggle to the 1 hour chart. 10 a.m. opened up right here at 21,730. Okay, that hourly candle took that 9 a.m. hourly candle's lows liquidity inside that 50-minute fair value gap. This box over here is a daily fair value gap. Now let me show you guys that real quick. That's what that is, right? So I'm pushing this across into Friday. This gap was Tuesday, right? Tuesday last week. Okay. So I'm emphasizing that because it's very important, right? So once I seen price, we're in a discount, 21,682. We're staying below the opening range gap. right? And I'm going at the 1 minute chart. We go down, take sell side liquidity inside that 15-minute gap. We stay inside and then we push out. From this point at 10:32, I'm looking for the bulls to start attacking to go on the upside to take liquidity, right? Or 1 to 2 and get to that at least to that 50% level. And this is another thing, another keynote. The first presented fair value gap is very crucial after 9:30, 9:31. Anytime after 9:31, continue. The first fair value gap, we use that as a catalyst to distinguish whether or not we're going to stay above it or below. So as you can see, I'll mark it up again here for you guys. That, my friend, is our first presented fair value gap. So we're in a premium discount. We took buy side liquidity. We still have sell side liquidity. We still have 50-minute fair value gap, and then we're looking for buys. Okay, so we're not gonna FOMO and enter here. Okay, we don't do that here. So around 10 o'clock, it opened at 21,731. Right, we rose up. Now look at this hourly candle, guys. We rose up and we started selling below the first presented fair value gap. Now we're out of there. Now we're okay. Now we're going deeper in discount, right? And we go straight down. We're attacking liquidity from that 9 a.m. low. Grab. Now I'm gonna show you guys the 4-hour chart because I'm working out the 4-hour chart, 1-hour chart as the bias. Correct. 4-hour candles open up every. It's three numbers. It's three numbers. 6 a.m. Well, 6, 10, and 2. 6, 10, and 2. 6, 10, and 2. 6, 10, and 2. Every 6, 10, and 2, there's a new 4-hour candle. Okay, so 6, 10. This 4-hour candle is forming at 10, 21,730. 21,730. So now listen to me, guys. This entry is in the wick, as you can see, of that 4-hour candle. Again, we're attacking and engaging the price from a premium and or discount perspective. So if you understand that, chances are your entries are going to be at the open, close to the open, close to the low, or inside the wicks. Okay? No. I know it's clicking. So at 10, we rose up. We gotta wait for liquidity. We need more information. It's too early. It's 10 o'clock. You can still catch these moves. Don't get me wrong. I'm not catching these moves. I need that. This is our scope right now. That opening range gap range, that first presented fair value gap, and any liquidity or inefficiency around there, we're watching that. Okay, we're watching that. We're hunting that. So once 10 a.m. took 9 a.m.'s low, in my mind, this is the low of the 4-hour candle. It's the low of the hourly candle. It's a low. It's a discount price from the opening range gap and just the daily range of the AM session itself, right? Asian session was low. So I'm not looking for sales. I'm looking for buys. At this instance here, we have a fair value gap that formed at 10:37. In my mind, this is the time to pull the trigger. Why? We rose up, respected the first presented fair value gap, and dove down. This is the best, in my eyes, the A+ setup that we're looking for. We're reversing back into an inefficiency price. We're in a discount range. We're in a low of the opening range gap. We took liquidity. There's nothing else. I mean, this is where you pull the trigger. You pull the trigger for about 25 pip risk, and obviously we're going for 1 to 2. We lock in at 1 to 2, just to keep that account up. We lock in at 1 to 2. Obviously, this gave us way more than 1 to 2. The 50% level, which would be really nice to attack, would have been a 1 to 4 price. Would have been a 1 to 4 trade setup. Granted, we didn't take it. Okay, cool. At least go for the liquidity. I didn't go for that. That's 1 to 3, almost 1 to 4. Cool. I snagged just above the first presented fair value gap because once it was going back down, well, I already closed before. I just closed it because I already caught 68 points. You know what I'm saying? I'm trying to keep this account up. I'm trying to understand how I'm doing these setups specifically. So I locked in there, right? And as you can see, we took liquidity and we kept on running up. And on the 4-hour chart, we took 6 a.m.'s 4-hour liquidity. Let me show you guys how this looks. See this right over here? 21,797. Okay. 21,797 is this high right over here. Grabbed on the 4-hour chart. Now let's go to the 1-hour chart. We have these two liquidities, this liquidity points just sitting here, okay? We attack those. For anyone that's in my Discord, right? Anyone that has VIP access, you guys know my username is I take your stop loss. Okay, that's what we do here. But anyways, so look what 11 a.m. on the hourly chart did. 11 a.m. on the hourly chart, right over here, 11 a.m. opened. And what did 11 a.m. do? It took liquidity on the upside. It took buy side liquidity on the upside. Taking 10 a.m. high, which was this right over here. Wait, the 10 a.m. high, 10 a.m. high is right over here. And we also got 9 a.m. high, which is right over here. Both these instances are a higher time frame liquidity. Look, purged. So, listen, there's a lot of things that I just mentioned to you guys there that made this candidate an A+ setup. I really hope you guys enjoy the video. I'm gonna leave it at that. Really nice trade setup. As you can see, I took it on my paper trading account. I wish I took it on my fund. We didn't. I started this account with 3,000 and now we're already flipping it up. I'm purposely, this was just last week. I'm purposely managing this one account just to approach it a specific way. As you see, I'm using a higher time frame, 1 hour, 4 hour. I want you guys to look at this real quick and just give you guys an understanding of how I'm attacking price, right? I'm going for 1 to 2, 1 to 3 trades and minimize my losses. Let me give you guys an idea just to look at this, right? Of course you're gonna take losses, but my winners overtake that. And that trade I just shared with you guys, 10 units, 10 micro contracts, was a $1,300 trade setup. Smooth, real clean. I'm glad that I was able to break down this video for you guys, break down this trade. Many more trade setups for you guys that I'd love to share. But I'm definitely gonna drop them in the Discord. It's probably already in there. There's a few trade setups that I try to work with my team in there. I try to drop some sauce for y'all. I hope you guys stay tuned for the live stream that's coming. Stay tuned for the next few breakdowns that's coming. Stay tuned for the psychology videos. Stay tuned throughout the videos in general. I am a high frequency algorithmic trader. And make sure y'all go in Discord chat, check out my WAP, check out the free guide, free course that I created for you guys. I literally created a free approach to engage price the same way that I do. Y'all go check it out. Like this video, subscribe if you're new, and I'll catch y'all next video.